Today, the live cattle was firm today. Cash cattle trade was very slow, and we expect that for the last number of weeks. It's been slow Mondays and Tuesdays. We keep waiting for the end of the week to find out where the real trade is going to be. But early in the week, and we're early in the final month of the year, all of these things, packers are now just kind of assessing what it is they're going to need for the end of the week and for really the end of this year. So that kind of movement is really not expected to the end of the week, and that's where we're going to get a little bit more direction and figure out which way we're going to go. And I think the market showed that today, kind of mixed on both sides of the market, very relatively thin, especially in spite of the fact that we had the big G20 summit over the weekend. The feeders slipped, and it seems that they're suffering the year-end doldrums, and so they were not inspired at all by the reports that came out of the G20, and it seems that there was some short covering, but it was countered and then some by some long liquidations. That just tells us that people are already thinking and moving into the end of the year positioning, and we're just like uncertain about which way we're going to go. And this is normally where we are with the beef market, and we've kind of been stuck in a little bit of this channel. Even though we're at the lower quadrant of the channel, we're just moving kind of sideways right now. I'm surprised that there hasn't been more trade reaction to the summit and to the announcement that they're going to stop the tariffs for 90 days. That didn't, it didn't affect that. It didn't affect any of the beef markets, and as well as the hog market, which was a big surprise. The hogs fell pretty hard actually for a while. There was a pretty big range there today. That summit report really gave nothing to traders there, and I think that it's possible that the market was already baked in. There's something really to think about too about the African swine fever, which also was holding the market up higher. Unless there is a complete global redistribution of pork, it's going to be very difficult for these real fundamental prices or to increase the exports to an area where we can really kind of support the prices that we're at right now. Now, everything in the futures market is really just the idea that we're going to have a lot more business in the future, but it hasn't really happened all that much, even though China has bypassed they have, in spite of, I should say, the tariffs on pork, they have come in and taken some of the U.S. pork for themselves, because there's been such a big shortage. So that has helped our markets quite a bit, but I guess that it's already baked in. We have to watch that kind of closely. Maybe today's sell-off might be a little bit too much, and you have many traders on the sidelines because of the uncertainty and the wild volatility. Makes a lot of traders somewhat nervous. But now that the information is out there, I think that they can jump back in, and we can start to kind of position ourselves for the end of the year of 2018 and kind of get ready for the 2019 trading year.